Hello and welcome. In the previous lesson, we learned about debit and credit. We first assumed the sign of assets to be positive and the sign of liabilities and equity to be negative. This is a normal assumption since a company is just a legal entity. Therefore, whatever it has must belong to others. Then, we replace positive for debit and negative for credit. In this lesson, we'll catch up from the last part of the previous one, and we will learn about journal entries. We will just repeat the previous transactions. However, this time we will record the entries. And here we start. For your land contribution, we debit land under assets and credit your contribution under equity. We do the same for your friend's contribution. We debit the building and cash under assets and credit his contribution under equity. Then you bought inventory for cash. You bought 16 bags of cement for 100 each. We debit inventory and credit cash. See the way we are writing down these transactions? These are called journal entries. Journal entries are just the recording of accounting transactions. Let us continue. You bought 12 additional bags of cement on account. You bought them as before for 100 each. We debit inventory again and credit trade payables. Note that we always put the debit entry first and then the credit. But would it make a difference if we put the credit entry first? No, it doesn't, as the result is the same. However, as we have learned so far, for many reasons, standardization is good. Let us continue with the next transaction. You sold 9 bags of cement for 1500 in cash. We debit cash with 1500 and credit cement sales. We also need to record the cost of the sale. The cost of these bags is 900. So we debit cost of cement sales and credit the inventory account. So far so good. But wait a second. This is not how you are used to record a sale with the accounting software you use. You simply state the quantity and price and it's done. So why this double entry? Well, although it's true that you just need the quantity and the price, this is what you see. This is in the front end of an accounting software. In the back end, it is the same journal entry. Let's have a look at one example. We navigate to QuickBooks. We create the sale the way you usually do it. We choose the item as cement, the quantity as 9, and the total value as 1500. Of course, you would normally need to add other variables such as the customer name, but this is not important in our case. This is the invoice you usually see. Let's save it and navigate back to it. We choose Reports and then Transaction Journal. See? It is the same as the one we recorded. Cash is debited by 1500 and sales is credited with the same amount. Also, inventory is credited with the cost of 900 and the cost of cement sold is debited with the same amount. Any accounting software must be based on the theory we are learning in our course. We will further discuss this aspect when we learn about setting your own accounting system. For now, let us continue with the remaining transaction. You also paid 100 in cash for delivering the sale. So, we debit delivery expense and credit cash. Again, the way we are recording these transactions is referred to as journal entries. We add a couple of more transactions before we finalize. You pay your credit suppliers. The account is a liability. To decrease it, we debit the amount. You pay them in cash, so we credit the cash balance. To our last transaction, you sell 3 more bags of cement for 500. This time, you sell them on account. That is, you will receive the money later on. Do we have an account where we record transactions of such nature? No, so we have to create it. Since what's in this account will become cash later is an asset. Let's call it trade receivables. In the trade payables account, we record amounts we have to pay later. In this account, we record amounts that we will receive later. For the journal entry, we exactly repeat the previous sale transaction. However, We replace cash for trade receivables as we will receive the amount in the future. These are all the transactions for this lesson. But what if you were to receive the money of this sale later? What would be the journal entry? You would receive cash, so we debit the cash balance and credit trade receivables. That's all for this lesson. Journal entries are just the way we record transactions. Before we finalize, I ask you a question. Your trade receivables balance is 500. How would this amount be recorded on the balance sheet of your credit customer? With this question, we come to the end of this lesson. I encourage you to practice the exercise sheet that can be accessed through the link below. That's all. I hope this lesson was useful to you.